Okay, let's do the end of day review, and then I'll take a few questions before I end this live webinar. All right, so we have market closing pretty high I'm sorry, going pretty high above the moving average, buying last couple of hours pretty steady, and then pulling back to the moving average and then closing above with bar 80 and 81 yesterday. So we are now stuck in between the last week's high and the last week's mid-level, and that's it right here. This is the mid-level and that's the high. So we couldn't reach the last week's high, so I said yesterday during the end of day review, it is possible that we are most likely to test over there, and then and we're gonna have buyers coming 50% of the time. It'll look for a follow-through buy at the open, and then possibly 2 hours, hour and a half, 2 hours later, sideways and down possible. But if the day is extremely bearish, the same thing, say, is market sold prior hour, and then the new day begins, it traps everybody trying to buy there, a reversal, and continues to sell. And then at the end of the hour and a half or 2 hours, either if this is extremely strong selling, it's going to make a double top at the EMA and continue to sell. If it's a shallow selling, if it's a shallow selling, it goes like this, it could actually starts to reverse and goes back up to some breakout test point. So opposite also is true for bulls. Is we have the 50% follow through buying, turns into a small pullback bull trend, and then eventually trends need to form a trading range. It needs to go sideways. Now it didn't go sideways and down. Instead, it looked like it was, and it actually trapped the bears and reverse back up, because this is not a shallow buy, continuation buy at the open. This is a major buy, sets the tone for the rest of the day. So I'm going to talk about, let me clean this up. So let's talk about I said that we closed yesterday pretty high, so we're going to test its high at the open. If there are any sellers show up there, I'm looking for bear bars to move underneath the moving average, then go and retest and then start to sell. That did not happen. Instead, we kept going higher and higher and higher today. So now what are the signs you're looking for at the open to become bullish or keep adding to your long positions, right? So let's talk about that real quick. So is bar one. Bar one is very important. Is if you know that market is going to sell for a while, maybe 10 points, 20 points, whatever, maybe even 40 points. You want to see early on bars close bodies below the bar one low. Do you see that happening here? No. Bar 2 tests the bar 1 low. For one, it found buyers, and it was the leg 1, leg 2, and leg 3. So there's a 75, 79, and 2 low wedge bottom. We're going to go and test it. 78 high is 77 high. And we just did that. So now you have a trapped bears in the market with an engulfing bar, a decent body. Everyone will start to buy very quickly. Since the bars are overlapping, it's better not to buy one tick above bar 2, even though it's a second entry long. When the second entry long has a huge wick and it looks like a made a new low, it's better to look for a pullback to the moving average and then buy. Better yet, look for another buy signal bar and buy. So bar 4 is not touching the moving average. It's got an upper wick. It's not all that great. You're still stuck in this upwards trading range and in a bigger trading range. And the reason why bar 3 sold, because it's a trading range high, there are probably sellers with the 77 range. They will try to sell around the 77 range. Now, why? Why would they sell around the bar 77? Twice, in fact. Why would they try? Because after bar 77, which is a bad buy signal bar, it trapped every single bull, and then bears were able to get two-legged move down. Anytime, please pay attention. Anytime when you have two-legged move down, that means this right here, especially if you have a bad buy signal bar, that means this area is now a supply zone. Now, granted, there is nothing mentioned of a supply or demand zone in the Brooks price action course. You can call it a strong sell zone. You can call it an area of interest. It's an area where resistance is. There are a bunch of sell orders. So you're going to look for a couple of legs up, and you're going to look for a first sell. You're not going to sell that. And then you look for a second sell. If the second sell signal is strong and it gets a follow through second sell bar, okay, then you can sell. But let's take a look. This is the first sell right there, bar 3. This is the second sell, either the 6 or the 7, but what's up with that? There's nothing decent about any of these bars, bear bars. Do you think the bears are going to sell and look for a swing? Hell no. They're not going to do that. So that means this is not a good supply zone. That means this is not a good resistance. Resistance can be really good, but if the market makers are powerful enough, strong enough to absorb all of those buy orders, this is what you're going to end up getting. Tried once, tried twice, and failed. Or you're going to get a bunch of dojis. So bulls are now buying, they're showing you a bear bar followed by a doji, then a bull close. Don't hesitate, just buy it. This is now a small pullback bull trend. Another one that's not a sell signal bar. It tried to be one, bar 9, but it's not a sell signal bar. So now, but there's a doji right after that. Okay, I'm looking for this thing. Bear bar is doji and a bull bar. I want to buy. This is my sequence. Okay, these are the things that I look for. So same thing here. I consider bar 9 because they try to sell it. There were sellers were present. They pushed the body. So there's somewhat of strong bears in the market, but they're lacking a bear body. Then they get the doji. Now my sequence is bull body. Oh, that's great. I'm buying. I'm going to buy the close. I'm going to buy one tick above. I'm buying. Oh, look, another bear bar is okay. Where's the doji and a bull bar? I didn't get the doji, so it ended up doji and the bear bar is one bar, and I get a strong bull close. Buy that one. Buy one tick above, buy the close. Just buy it. Then it keep going, going, going. Oh, okay. So sequence begins again. I've got a bear bar. Where's the doji? There's none. Oh, but it closed a bull bar. Oh, I'm buying it because this is a strong trend now. Now, if you go to a higher time frame, let's go to a 10-minute chart. I want to count some legs in this, okay? So I can actually see it. Up on this, down, second time we went up. That's the second leg. And then maybe we came down. Nope, we keep going, right? And then keeps going and going. Maybe there's a pause here and goes up. I still can't count. It's not all that great. So I'm going to go up to 15 minute. Although 15 minute is here, but I want to look at it here. Okay, so I'm looking at it here. So up on this, it's still, we're not breaching below the bar's low. So this is a one big leg. I still can't say. But there's up on this, maybe down on this, up on this, down on this, up on this. There's a little wedge. That's a wedge failure. Big bar, so the count begins again. Up on this, down on this, up on this, down on this, up again. Difficult to count, but I can count it because I trained my eyes. Now I'm going to go to maybe a lower time frame. I'm going to go to 3 minute. If you're having a hard time counting the legs, feel free to go up or down until you see them clearly. There's a one leg here, there's a pullback, right? There's another leg here, but didn't take out that high. So this whole area is a one leg pullback. And there is the third leg, okay? So now bears try to sell it, wanted to come down and test these lows, failed. So now we're taking that out. So this is a wedge failure, probably a measured move to the upside. So maybe I can just measure from this high, from this low, and that's my measured move target. That's great. Count begins again right there with a strong breakout bar. Here is a leg 1, pullback, leg 2, pullback, leg 3, right? And that reached right there. So, and then it kept going higher and higher. Maybe this was the leg 1, pullback. This was the leg 2, pullback, and that's the leg 3 divided into 3 more legs. So that's your embedded leg. So I'm sorry, embedded wedge. So when there's an embedded wedge, that means is we are done. We're most likely to come back down. So I want to get back to the now 5-minute chart. That's the one that I trade. But I wanted to show you guys. If you can't see it, then don't, you can always lower your time frame or higher your time frame until you see the legs clearly. So let's count. All right, so we have these last leg up, maybe leg 1 pullback is leg 2 pullback, leg 3. Now, before this impulsive move up and finally is bulls are taking profit, there is the unfinished business there with 29 high and 30 high, shaved top. So and really strong inside bear bar close. Most likely bulls will start to take profit. It might come down 5 points minimum from below bar 30, or it is going to come down 10 points, 15 points, 20 points, whatever. You can just measure it. And I'm going to measure from here. That's 13, but really it closed the bar here. So that's roughly 10 points. If you count from here, yeah, that's 10 points. So they start to take profit there. But really is what you need is this. Find this level, markets, and when it comes down here with 2 legs, you are going to, if you sell this, you're going to take profit. If you are still long and you're disappointed, count 2 legs and then put a buy order in this area and you will be able to get your break even. Because if you are a bull and you're stuck up here, you buy maybe the close of that bar is you're looking for a market to reach there. And it did reach there, leg 1, pull back leg 2 before coming back down again. I'm not sure why I'm getting this problem here. I can't seem to. The 8 pixel margin ends up becoming 70. It's really annoyed. Let's just keep doing it. Anyway, never mind. So this is a small pullback bull trend turned into a climactic, several climaxes, but is this a really climax? It's really parabolic. So when there's parabolic, I'm looking for a deep pullback with several legs or nested wedges or something. I'm looking for leg count. Now, somebody asked, I actually sold this. Plus, you have a high probability of market cycle, right? Trends going into the trading range. And then possible either breakout or reversal. Either breakouts or reversal. All right, so we have market now came down with 2 legs, right? So I sold above 32, I sold below 33, and I made money. I scalped at the moving average. Then I bought at the moving average, and I was targeting above bar 34 and the body of 32. We couldn't really overlap with the body, so I just scalped that out. And then second leg bulls show up, but that ended up becoming a double top neckline. So now we have another leg coming down. Bears try to sell it, but a bunch of inside bars, they're now failing. So this is the second leg trap. Now we're going to say, well, how is that a second leg? This is a leg 1, pullback, leg 2, pullback, leg 3. That's fine. That's the reason why you'd expect market to get back to the leg 3 starting point. Where did it start to sell? Either the body open of bar 40 or the high of 40. Either way, we went there. So right here, if a bar like 41 strong enough to get another leg or 2, except that the bears can't seem to take out its low, there's going to be a reversal there, right? This is actually, if you look at this is a reversal sign like this, like that, right? This is like it's a reversal sign. You may not see it clearly, but if you go to the lower time frame, you'll see it very clearly. All right, so bears are not able to take out the 41. We got a good buy signal bar. I would buy the close of that bar 45, and I would target this high and probably target bar 32 high or the higher. So market now went up to the 40 high, but it can't seem to close a bull bar. It's also testing the bar 32, but it can't seem to get to the close or the high. So now I'm not very happy with this. This is a trading range price action. I have a trading range with a mid right there. And the bulls are not able to get above the mid section, okay, mid range. So now is bears try to sell. So the bears selling, maybe they already, remember we talked about this while this was happening, as I actually ended up selling this, right? So I exited out of my long that I bought here, and then I took profit around bar 32. And I said, okay, we have an inside bar. It's somewhere in the middle of this trading range. I'm talking about bar 48. But let's see if the bulls can actually close a bull bar and continue to go higher. Problem here is that you got a leg one pullback, maybe leg two pullback. That's a leg three. Bar 49 actually did its work as a leg three, but it trapped everybody. It went up, it made a new high, right? Within the trading range. It just went above these bars. Then it closed bearish. When I see something like this, I call this a horn pattern. I actually made a video, it's on my YouTube, how to trade it. Go watch it. It's the failure of a horn pattern or the actual horn pattern. I'm looking for a 1 hour, 2 hour targets. Now, I see something like this. This is limit order bears started to sell. Now I'm looking for stop order bears. The first sign of stop order bears is when they close a second consecutive bear bar, bar 49. Bar 49 is not only a limit, and it's also now becoming a stop order, right? So stop order can be below the bars, maybe starting here, and it's also the market close. So it's when traders are hit market sell or stop orders, that means is they're looking for a breakout is in the direction which is down south. Okay, so it's going down. So what I did was immediately, okay, I said I sold 49 close. My stop is about above 49. I'm looking for a 1 hour, I'm looking for a 2 hour. I said I'm scalping this, but I'm looking for a lot more. We not only got that, and then it just came down. You could have also done this. That's a breakout, right? That's a trading range on its own. So here's your measured move target. Here's your measured move 2. And we came so close. Now, some people say, well, selling began right there, so that's a better target. Sure. I mean, at this point, you're going for like a 4R or something, or 3R. Who cares? I'm going to measure from there. I'm going to stay true to it. And here's 1R, 2R is why did this happen? Well, let's talk about why did it come down? Somebody asked the question, is bar 32, 35, and 41 lows marking some kind of a wedge bottom? I said, no, it's not. It may look like one, and you can definitely buy it, but it's not a true wedge to say it's going to go all the way up here. Why? Look at the distance from that low that you start to count to this bar, and then look at this distance. When it's not balanced, that means market is going to trap you if you're buying and hoping these highs to be tested. And it's going to give you a much better third leg down. Now look at this balance. These void areas are a lot more balanced, aren't they? So now this becomes your first leg, this becomes your second leg, this becomes your third leg. Now what they did was also selling, but it was really a 33% pullback from today's range. I only measured from here to here. Market first came to okay. So market first came to these 33%, right? That's the 33%, and it bounced right there. Then it came back down, and I said, if we get a bear body closing below 33%, we're going to come down to the 50s. I don't know what happened there. Oh yeah, I know what happened there. That was the FOMC minutes is release. So it just accelerated selling only to trap everyone. I already took profits, and then I left the runner. I said, oh, maybe it's coming down to 50%, but it's not happening. And then I got trapped. I sold higher, exited, and then I bought again. But there's something else that I failed to do. I should have measured from here, and that would have been the 33% pullback. Look at that. We barely touched it. See, that means right there, market is looking for higher prices. What if, instead of taking that, what if you measured all the way from yesterday's low to today's initial high? Then take a look at this. Are we above the threshold? Yes. What does that mean? 3 times they try to move under, fail. That means market is bullish enough. You should be buying every single strong bull bar, every pullback, expecting these highs to be bridged. Market is screaming to you. Look at Rose's threshold number. We are above it. That's why it's green. We are above this. We're not moving underneath to get to the 33. So therefore, we're probably going to go higher. All right, so keep that in mind. If you use it, use those levels. Anyway, so is market, here is a wedge bottom, 35, 41, and 53. Then you have a inverse head and shoulders, 41 left shoulder, 53 head, and a 59 left shoulder. Not a good buy signal bar. It's actually a bad buy signal bar. Suddenly we get this bar 60. What the heck is happening? Well, you're in a trading range. So I said to everyone, I'm not really fond of this bar 60. For one, I was still long. I bought it, but I am not interested in it because I was stuck here with my runner. I took a lot of profit when this was coming down, but I held a runner and it got stuck. So I sold at the upper third midpoint of the same bar. And then you could have also sold one tick underneath 56 and expected so if you're stuck here, I'm going to take the look. And if you sell right there, one tick underneath or the close of 56, market will give you average break even before inviting bulls back in the market again. So you did have a chance to break even there. So now what am I looking for? This leg down started here. So I'm looking for market to bring us back up to these highs. Okay, maybe the 51 high, 49 high. So I'm really targeting the 49 high. And look, we went up, came back down 2 legs, and then we went back up again. Right here, what happened with bar 60? So a lot of things happened. I actually had a trading technique that I shared with you guys, so I'm not going to go through it all. But really, there's a gap open here. When the bears can't close the gap and take out the open of a strong bull bar, that becomes a bull flag. You should be targeting its high or that high from the wedge and looking for this trading range highs to be tested. Another strong bar. Right, when a signal bar is too strong but ends up becoming a leg in a trading range, I don't buy that bar. I actually took profit there. I told you guys this bar is going to come down 61 and test its midpoint. Then the buyer stuck up there will buy and get back up there. But this is now forming a bull flag. So we have a double bottom, 61, 68, a bit of a lopsided, but it's there. So it's a double bottom at the moving average. It is a bull flag. I'm looking for a good buy signal bar. I told you guys that I would not buy this yet, but wait for bad signal bar highs to be tested. If the bears, and plus this is a gap bar, if the bears close the gap and start to take out the close of the gap bar 59 and the low, then we would have sold even more, maybe even vacuum down. But that didn't happen. So we not only kept the gap, we also did not go beyond the gap bar. So we're going to go now target the nearest gap bar above the moving average. And that is bar 64. 2 legs down is inside bar. Bears are trapped. Bulls coming in. Really good buy signal bar. This time I'm buying. I'm looking for bulls to close above the gap bar 64, hence bar 71. I'm looking for higher prices. And if you remember, everybody in the trade room was buying with me. So we targeted these highs. We have a bunch of other targets that I'm not going to put on here for now. But you can watch the replay file and learn from there. So market pushed for the second time because this is not only a stop sweep above these highs, but also a strong bull close. is bulls are looking for higher prices, but they're disappointed with the amount and the strongness of the pullback into the breakout point is and closing a bear bar. Those bulls are not going to let go. They're going to buy at the lower third of 73 or the first close of a bear bar, because this is now a trading range, and they're going to try to keep this gap open. So I said look for a break even. I did the same. Buy, but really I actually took profit there. I wasn't really stuck there. I saw that this bar was trying to go and test the close of 73. I actually ended up buying, held a little bit, and I took profit. I was done. So I didn't trade any of this because it's the end of the day and the market is looking for reversal back down. Double top higher high neckline. Now bears actually took out that neckline. This could go sideways and give us a bear flag, and after hours can actually sell further down and test of these lows. There are buyers waiting in this area. So after hours, if the market comes in here, they're going to buy once again. Okay? I'm not sure if they're going to be able to go up, but at least halfway up this leg and two coming down, they're going to test around here. So I'm going to open up the question box, and I'll take a few questions before I leave. So GoToMeeting webinar question is now open. Please feel free to ask. I'll take 2 or 3 questions. Why is leg 49 a third leg? Okay, let's talk about that. Third leg for whom? Bulls or bears? $49. So the question the person asked is why 49 is a third leg? Bulls or the bears? Okay, I'm gonna go with what I know. So maybe you can type it later. If you're talking about the bear leg starting point, yes, it is, because right here. Oh, I know what you're asking. I know what you're asking. Don't say you don't know. You asked the question. Of course you know. No. Because I know why you're confused there. It's because I said this is the third leg. Look at 49. Look at 49 went above it, didn't it? It just pulled back and went above. So that's actually is the third leg. So think about it. It just is like this is right here, right? Bulls are buying. Then it's a pullback. Then you get a second leg up. None of these bars lows are taken out the prior bars low. So there's no pullback there. All the way up until, okay, 49. Look, 49 opened here, right? Went up, came back down, and closed. So it is not only a pullback and the third leg all at the same time. Does it make sense now? I know someone was going to ask, and I was really hoping that someone would catch that and ask me that question. But if you actually go to a smaller time frame, so let me frame that a little bit. It's 5 minutes. Sometimes it's difficult to figure out the legs, but really, what are you looking for, right? Anytime market is doing this, right? Maybe you got like this, right? It's doing this. That's great. You're still in the same leg. Then market opens here, right? And then goes up, right? And then comes down, closes a bar, and then does this. Did it take out? This low is now lower than that low. So what happened there? This leg was all the way from here to here. Leg is now it's pulling back. Now you get another leg, another bar. Higher, this low is higher than that low. And then goes and takes out that high, right? So now you're in the second leg. You can actually buy, right? So you see that happen. So what I'm going to do now, I'm going to lower the time frame. I'm going to go to 2-minute charts, and I'm going to look at and see if I can count there. Now look, do you see it clearly? Here's leg 1, leg 2. This one didn't take out that low. That's your leg 1. Then look, you see that? That didn't take out the low, so you're still in the same leg. It's going up and up and up and up and up. Look, none of these are taking out the prior lows. You're still in the same leg all the way up to here. So this is the second leg all the way up to here. Then this bar takes out that low. So now that's a pullback, right? Look, comes down and then goes back up. Look, it goes above the prior bar's high, but that's the third leg high, but it failed. Make sense? Is go to 1 minute charts. I think it might be even better. Now, where's that? Oh, right here. Okay, so look, this is the leg one. None of these lows are taking prior bar's low until this doji. Right, so I'm counting from here. Then it comes down. As long as we don't take out this low, this is a pullback. So now bull bar is taking out that bar's high, second leg begins, right? Now it's coming down, right? Maybe I can count 1, 2, 3, and then new legs begin, right? So I can count that way because this kind of starts the recount. That's what L says, right? When a bar is too strong, you already count 3 legs. Look, that is leg 1, pullback. This is leg 2, pullback. Look, we're not taking out that, so that means the third leg began here, went up. So this is leg 3. It was still going, but then we got this huge breakout. So basically you have 3 pushes here and fail to sell. So now you have a measured move target. You can even measure it from here. Look, and then you have a huge bar. So from here to here, you can literally buy this bar and say count begins for 3 pushes or 3 legs up. Doesn't matter how it is. But in the meantime, there is a wedge failure to sell. I'm going to buy, and that's going to be my measured move target. Now look at that. We test the measured move target with the close of this bull bar. It goes up a little bit and fills everybody and then just closes. So that right there is a lot of profit taken. It's no joke. But let's count again. Right? So I start here. This is a leg. Maybe started here or here. Right? This didn't really pull back. This is a one big leg. When was the first time it moved and breached the prior bar's low? With this bear bar, right? So let me point it. With that bear bar. So that is leg 1 ending, pullback beginning. So now pullbacks can get 2 legs, and if the second leg traps, that means we have a second bull leg starting. If the second bear leg traps, meaning it's a shallow leg, it's a small leg, can't take out the first bear pullback legs low. That means the bull leg's starting, right? Here it is. This is your second leg starting. We went above the bars. This bar went above that bar's high. Second leg began. You can put a buy order and go long. You're going to have to take profit at the highs. Now, pullback begins. This bar takes out the prior bar's low. This is a pullback 1. Pullback 2, second bear leg, right? And then the third leg begins. This is a third leg because it took out the prior bar's high and took out the second leg's high, but couldn't get more. It got inside bars, but couldn't get more. So that's done. That's why. Get it? All right, good. All right, let's go back to the questions. Counting legs is fun, and that's the easiest way to trade. All you have to do, when was the last time the bar went below the prior bar's low? That means continuation down until you see a bar gets above, takes out the prior bar's high. Leg counting is the essence of trading. If you cannot get it under control, do not trade. Do not put any money in the markets. Get that leg count under control, then you can trade. Because if you cannot, what does Brad Wolf say all the time? Learn to leg count. It's very important. Because second legs are going to be your money maker, maybe into the third leg. But you can never scale into third leg. When you scale in, machines are taking profit. So that's why you don't put all in third legs. So if you can get that under control, it's a lot of exercise, but once you learn it, you learn it. It's like riding a bicycle. All right, next question. Let's see, there are way too many. I can't answer all of this, but I'd be happy to continue tomorrow morning. Is why did you use bar 69 and 70 for measured move? That's not measured move. That's okay. That is not measured move. That was actually a swing target, Richard. It's actually what I'm looking for is a reversal, and I'm looking to catch a 2R swing target. So I'm looking for is double tops and double bottom failures, 2 of each, possibly. Sometimes only you get 3 and it still works. Like here's a double bottom, here's a double top, right? That's not enough. You can sell below this and look for a 2R minimum. That's fine, but that's only one. Or you can say is, I can even do it here, is I've got a double top and then double bottom. So what do I need? I need 2 bull bars to buy and go for a 1R, 2R. It's only one set. And if I have 2 right there, can I go for, if I'm only counting 1, my entry is from the close, but that's 1R. But really my rule entry is stop order. Problem with that, you're not going to get your 1R. That means this is not a good swing producer. It's only one set of double bottom and double top. So that means market is probably going to go sideways and make more double bottom and double tops. So I've got a double top there, double bottom here, another double top. Now I have 2 bear bars. Okay, but let me do this. It's the first double top, it's the first double bottom, it's the second, or actually it's the second is small double bottom and a double top. Bulls are not able to break out, but bears now showing me 2 bear bars. If I want to take this, I enter one tick underneath 49. That's my 1R, that's my 2R. Anything more is a bonus. If you want to go for a 4R, market gave you a 4R right there. That's failure of a failure twice is swing trades. So we're going to continue because market is not getting all that of a strong swing here. It's going back into this trading range. That means there's more double tops. There's another double top and there's another double bottom. So now I actually have a bigger double top, maybe like that, a bigger second double bottom, another double top, right? Another double bottom. Wow, okay. But I cannot sell in the middle. I want to sell up here. I would never take this trades. Never. This is not a swing. Just because I saw double tops and double bottoms, I'm either selling from the high or buying from the low. So now I'm looking at okay, I want to buy, but I don't see a 2 consecutive bull bars. Again, 2 consecutive bull bars. This is market maker's way of trying to trap you into a bad trade. If you study this behavior, consecutive double tops and double bottoms, I believe I read it in the book, and I think it was the blue book. I'm not sure, but anyway, and I took it and made it into a trading strategy. So this is, you're stuck in the middle. I'm never going to swing from the middle. So I cannot buy or sell this. So I'm looking for another one. Okay, there's another double top, there's another double bottom. There are no consecutive bear bars to say I can sell this. Nope. Oh, but 2 bull bars. I like this one, and one of them is extremely strong. And if this is a trading range, that one is actually closing above the midpoint. So now, if I buy one tick above that bar, stop below 69. That's my measurement stop, not my actual stop. My actual stop is below the higher lows, okay? But to measure my target to our target, that's how I measure. From the low of the first bull bar and the high of the consecutive second bull bar. If it's a good close like that, which is different than these 2 combo, right? So I buy it and I scalp at the 1R and the bar closed above it. Even if it pulls back, it probably is going to get to the 2R. That's it. Look, it just went there. Now, we also have 2 consecutive bear bars. Would I have sold this? No. You have 1, 2, 3, 4, 5, okay, is consecutive bear channel here. So anytime you sell against plus, you have this bar is high. So this is not a good sell signal stuck in it. So it's high. It's not like higher than this bull bar. So I'm not taking this as a swing. This needs to show me a second entry short and maybe I'll swing it. But instead, bulls actually took over that high and gave me the 2R. So there's a timing issue. This is never a good idea. I would never sell this. Bulls are still trying to get to their 2R. So stick to your swing and collect at the 2R, and that's what I did. So, anywho, so that's that. So it wasn't really a measured move. There's so many questions I can't answer all of these. So I'm only answering these today's price action related ones. I'm hopelessly short biased. How can I get rid of that? I think we all have that, and the reason why you're short biased because it's like a car rolling down the top of the hill. You don't even hit the gas. It just it just rolls down, right? It's the physics. Anytime selling is always faster than buying, right? It's just the way it is. So we all favor that. And there's something to do with the color of the bars, right? I don't know what it is. It's the red or the black, but here's what you do. You want to get rid of that bias here's what I want you to do. And I want you to do it today, tomorrow, and document your progress. Go to here and pick a color that it does not represent is bullish or bearish. Okay, so let's pick a color. What do we pick? Transparent. Oh shoot, that's not what I was trying to do. Let's do this again. But I think you know what I'm talking about. Okay, so let's do this. Okay, make it transparent, right? And tonight, go onto a random chart and start trading this. I want you to count legs. Look at how bars are closing, opening. Their lows, breaching the prior bar's low, or their highs breaching the prior bar's high. Count those legs, find your wedge tops and bottoms, find your second entries, so and so, and see if you can actually take trades with that kind of bias, not with the short bias due to the color of the bars. If you get that under control, you're going to be great. Now, if you don't, you're still selling, for example, here's a wedge top, right? Even though it's descending wedge top, it's still a wedge top above the moving average. Now look at these bars, right? So you got a bar here. Look at that. That's a bear flag. Say you didn't see it, like here. 1, 2, 3 is what does L say? So if you have a wedge top, it turns into a head and shoulders pattern. You have a wedge top, probably it's going to turn into a head and shoulders, right? So look, that's the lower high and it's sold. So it's probably going to come down somewhere here where the buying was strong, or maybe here. So you're targeting somewhere from there to there. So if you do sell, okay, you're going to take profit in here. That's it. You're done. And then you're going to look for a bounce. You can even buy from there. Look. Why? Because there was a wedge there and it broke out, or it was the third leg up, so it's going to come down and test the third leg's low. So don't sell everything. Just make sure these wedge top is accomplished, and then you get a second entry short, then yes, you're going to take a little bit of profit there. You're going to look for a pullback. Then you're going to look for another sell, and there, right? So that's all you're going to do. And if you get a wedge top, right? You get a wedge top, and the market is selling, comes in here, and then suddenly goes and takes out that high. What are you going to do? Well, wedges can produce 4 pushes. Then it comes down, does a shallow pullback, and keeps going. That's it. So then you can take that high and take that low and project it up. That's where the market is probably going. A measured move. That's a wedge failure. So try to see those in a unified color chart and see if you can identify those levels. So I don't know how else to help you. I'm just thinking. Let me get back to the chart. That was, oh no, that was black. So if you're gonna sell, then make sure that you're selling in the right place. Learn about the market cycle. Even Al Brooks's books are written in that order. So trends go into a trading range. Trading range is either breakout or reverse. Today was no different. Trend goes into a trading range. Big sell, so that creates the trading range low. We might actually breach a little bit, but eventually we're going to go and test the high. Find your midpoint and see how the price is reacting to that midpoint. It goes and it sells again. So now your trading range is actually a little larger from the open to the last bear close, which is right there. So this is your trading range, right? So where's the half of that trading range? Right there. So I'm going to mark that and get rid of it. All right. So what am I looking for here? What am I looking for here? Well, I'm looking for bulls to get above that midpoint and go test here, right? So I can buy here. These are extensions, right? So if the extension is this much, right? So let's make that a different color. If the extension is that much, take that exact amount, put it up here. Because chances are is when we get above that midpoint, we're going to go and test inside this. So you can hold on. You don't have to measure anything. You can hold on to your long until we hit somewhere in here. So look, we're still this trading range is still going. I'm looking for consecutive bars closing above this midpoint. And in the meantime, I'm going to extend this and that. Right? So that should be red, by the way. Oh. I'm congested, I apologize. I barely can breathe, but here we go. So there it is. Look, 2 consecutive bull bars above the midpoint. So now you're holding, you're buying, and you're gonna start taking profit here. So here's your first profit taking bar, hence the upper wick. Machines are not stupid, they know they need to take profit here. Amount of the breakout is projected up above your trading range. Look, they took profit. But did anybody come down and test the midpoint or close below it? No. So you can't really sell, can you? No, you can't. So this is still bullish. It's trying to go, it's trying to get the exact amount, if not more, above this high. But it can't. So it's the second time bulls try and fail. Now bears getting a second sell signal. I bet they got a 5-point, if not 10-point scalp there. Yep, they got 525. That's it. And then I don't know what happened after that. It's probably bouncing. Yeah, it is bouncing right there. So yeah. So you had a 21 to 22 tick scalp there, if not more. But that's about it. Yeah. So now what do? Well, extend it. Right? You're still trading this trading range. Right? So you're hitting the extensions. But how would you call this? Is it a bullish? Are we bullish or are we bearish? Well, we're still bullish. We're still above this. So they could still buy. They could still buy. Once we move underneath the 50%, it's going to come back down here once again. I don't know why I hung up on this one, or if anybody asked her, what was the question? I don't even know if I answered the question. Anybody, anyone who asked the question, hopefully I answered, but I think maybe this was the question for the short bias person. So if you're gonna want to sell, is look for market to go into the sell zone extensions and sell from those levels with the second entry short, right? So look, it comes down and tests. Look, that's the second entry long and takes profit at the mid range. Then comes back down, first entry long, second entry long, but can't close above the moving average. I'm sorry, can't close above the mid range. Comes back again, now they close it buy. Hold it until here, until you see a second entry short. Then sell and hold it into the mid range or so. So just, you know, um, you should also look to buy. Buying is fun. Today was definitely fun. The small pullback bull trend. They faded every bear bar they saw, and then they bought every big bull bar. It's great. Why are we getting these big bull bars? What were the reason that we're getting? Small pullback bull trend happens because the bulls are um, fading every bear bar. What does that mean? Because they want to run their stops. So if you're a bear selling, your stop is right there. When the bulls take out those stops, expect follow through. Here's another bear bar. Their stop is there. When the bulls are taking out that bear bar 15's high, that means they're going to run the stops and then expect a big bull bar because it surges. What happens when a stop run happens? If somebody's bearish in the market and their stop is being hit, they're upset. They have to make that money back. So they convert being a bull. So when the bears and the bulls are buying at the same time, whether their stop is being hit, that's why they're buying their contracts back, involuntarily, or those bears are turning into bulls, and then you get these big bars. That's called market makers' way of creating frenzy. Okay, so that's how they move the market. I'll take one more question. Can we buy the 53 when it looked big bear bar or too risky? Because of strong bull trend, low chance of market to hit bull stop loss is bull stop loss. Okay. Can we buy 53? Okay. Can you buy 53? Well, it's the third leg down. In essence, look at the line chart. This is what the institutions look at, right? So look at this huge gap, right? Look at the legs. You can count the legs right there. There's a big leg, pull back, maybe leg 2, pull back. This was maybe the leg 3. Market eventually want to come back and test here, or it's going to go back up and then come back down and then sell. So but within this leg, you have several different legs, right? Here's a leg 1, pull back, leg 2, pull back, maybe leg 3, maybe leg 4. Finally, that created a wedge top. But in between, you have these gaps. Look at this gap. Where is that gap? Maybe from this low to that high. So what was that, bar 53, came all the way down here. Did that gap close? No. Because the whole area was so large. And look at the gap. Look at the gap, right? So it's 18, 19 gap is even right here. They try to close the gap from 22 to bar 24 low. That's not close. Yes, wicks are overlapping, but they're not bear bodies completely overlapping with the bull bodies and closing below them. That's not happening. It's just coming down and it's processing buy orders and it's pushing the bar high. I said at that time, I'm very upset with this because I made a lot of money selling, but my last contract, I thought maybe I can get the bar, the 50% pullback. It didn't happen. Now, what am I going to do? What will the upset bears will do? They're going to look to sell somewhere, break even before bulls show up. Now, the first sign of bulls are in the market is to the left. To the left, to the left. Everything you own is to the left. right? It's the bars, the gap bars. If there is a gap, always expect buyers. Limit order buyers are entering the market. If the bar is too big, now measure the entire bar and see where the bar body closes. If it closes above its midpoint, then it's a weak bear bar, isn't it? It did close above its midpoint. This is right here is sign number 2 that the bears are not able to close the body below its midpoint in the lower third. No one is selling, they're buying. Now the number 3 sign is that if the inside bars are now strong bull bars, bulls will start to buy. But you always have to give bears a room, a chance to fix their bad trade. They're stuck down here. Maybe they sold underneath 44, 43, whatever. They're selling and they were looking for a measured move target, maybe whatever they were looking for. They are trapped. So here's the first time the bulls are buying, no one's going to buy. Here is the second time bulls are buying. Before that second time, bears will sell. So what do? You take that bar, divide it into 3 sections, find your upper third, and put sell orders in this 66% to 100%. This is your lower third. If you're stuck here, you sell somewhere up here. Maybe you sold a couple of scattered contracts. You're bound to make money and break even at the mid, right? So that's it. Bar 59 was your break even. So bar 59 actually gave a chance for trap bears to exit out of the market. Now, that bar did not close very bearish. It also did not close below the close of bar 53 as a body. So now it's also a weak bull bar. It's also a weak bear bar. If you get a bull close, that means bulls are entering the markets. That's a double bottom neckline. They're going to go test the neckline. And then you're going to look for a pullback. And then you're going to enter with good signal bars. This is the first pullback. They try to buy it, but those are not all that great. So this is the second sell for bears, sold 1 leg, 2 leg, maybe 2 leg, pullback 3 leg. Leg 3, David, are you watching? Look, this is a great exercise, just like bar 49. Bar 68 is actually your third leg. Look, it was a pullback 1 point and then leg 3. You see it? So good exercise, right? Leg 1, pullback. Leg 2, pullback. In 1 bar, it's also leg 3. So now I'm looking for bulls to enter. Oh, inside bar, and it's a bull close. I could put a buy order right there, or wait for a confirmation and enter long with bar 70. Buy to close, buy 1 tick above. Look for these highs to be tested. Look for those highs to be tested, but just go long. And if you get the second bull bar, that's even better. Keep buying. And then as you start to get huge bars and get closer, scalp, and hold the runner and see if that runner reaches some target that you might have predetermined. So that target would be maybe stop there, buy early buy here. That's 1R, that's 2R, right? And then next, maybe you bought there. Your stop is 53. That's your measured move right there. Or you bought above bar 670. Your stop is underneath 69. That's failure of a failure is swing. That's your 2R. All right, I am done with my session, everybody. You all have a great day. I will see you guys tomorrow morning in the Brooks Price Action Room. And 9 o'clock, be here. Be ready because I like to start 30 minutes before the market opens so we can do a lot of questions and take a look at the price action and whatnot. And then it'll be a half day event. And then I come back the next week. Okay, bye, everybody.